Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand, Forex and gold fundamental and technical analysis. If you like the analysis that I provide every week, please don't forget to like, subscribe, and share the video with your fellow colleagues. Don't forget to press that like button, as it helps really to kind of support the channel. A free way to support the channel and gets the quality content out there. Anyways, let's get into the week ahead, and we'll get into some technicals as well. And if you're new to Trading 180, basically our approach is really to combine fundamental analysis and technical analysis to make really the best trading decisions. So it's not, fundamentals are better than technicals, technicals are better than fundamentals. They both play a part in trading, and like I said, we use them to combine the best to find the best trading opportunities. Anyways, looking at the week ahead, and zooming in a little bit on this, you can find this at tradingeconomics.com, and there's a little tab that says week ahead. So central bank meetings, a very busy week this week. So central bank meetings in the Euro area, Australia and Canada, as well as several speeches by Fed officials will dominate the calendar next week. Also, China will release inflation rate and foreign trade figures, and GDP updates will be available for Australia, Euro area, Japan and Canada. Investors will also be watching closely the situation in the energy market in Europe after a crucial pipeline bringing gas to Germany from Russia will no longer reopen as planned. So that is definitely something you need to watch out for. And again, the devil's in the details. You can have a read at tradingeconomics.com, and then there's a week ahead tab. In fact, I'll just show you exactly where it is right here. It'll be one of these, depending on when you actually watch this video. It should be somewhere around one of these little boxes here. Anyways, let's get into some more technicals, as well as some of the week's fundamentals. Starting off, not on gold, but on the dollar index. And the dollar has been going from strength to strength to strength, breaking to, I think this is new highs. In fact, I think it is new highs. Let's just go to actually it's not new highs, but it's definitely multi-decade highs. So look, the last time we were at this high was 2002, so 20 year highs. Wow. That's really not really a surprise if you again understand fundamental analysis in terms of the basics is really kind of comparing currencies and seeing who is the best out of the two. That's really what currencies Forex currency pairs are really telling you, which currency is the better of the two, and you kind of determine that through fundamental analysis, either interest rates, inflation and GDP, and understanding the relationship between those three. And as long as you have a strong foundational knowledge of those three and how they interact, then everything else you can figure out and forecast and kind of predict where prices are likely to go in the medium to long term. So we did have on the on Friday the Labour FOMC. Sorry, 1 second. We did have jobs data's come out. So US labor force surge could ease pressure on the Fed for big rate hike, and it's a close call for FOMC on hiking 50 or 75 basis points, and you could flip a coin on September meeting, Swank says. So the strong August jobs report means the Federal Reserve will continue to aggressively raise rates, though a surge in the US labor force could give central bankers the option to back off a little if they choose. So non-farm payrolls increased to 315,000 last month, and the unemployment rate unexpectedly rose to a 6-month high of 3.7, the first increase since January, as the participation rate climbed, the Labour Department report showed on Friday. So it says you can flip a coin on how big of an increase they do in September, says Diane Swank, chief economist at KPMG LLP. While the surge in the labour force was wonderful, she said, I don't think they want to show at any point in time that they have stopped in their resolve to get inflation down. Now, for those of you who are new, who don't necessarily understand, the reasons why that is, I can't necessarily get into it, 100% in this video. I have loads of videos in my on my YouTube channel. In fact, let me just point you to that 1 second. Right, here we are. If you go to Trading 180 YouTube channel, loads and loads of videos that I have, and one of the things I would probably go to as well to really understand is if you type in webinar, right in there, in that little search area here, and click on this one here. Loads of different webinars I have on fundamental analysis, but the latest one I did was 6 months ago, a free webinar, and it's the 3 steps to generating a profitable forex trade ideas, and this will help you get right on track with understanding inflation, interest rates, and GDP and their relationship, and really how to determine a currency's fundamental value and currency pairs, and which way they are likely to go in the medium to long term. And so getting back to the article, but put it this way, since Jackson Hole, the Federal Reserve have been very hawkish, and a hawkish bank, meaning that they are looking to hike rates, is usually appreciates a currency, and so the economy part of things and the jobs part of things comes in to the fact that the economy can support rate hikes. Yeah, that's what they're looking at, is that the jobs are a leading indicator as to what the economy is doing, whether we're going into potential recession or not, because you tend to have high unemployment in a recession. You have low unemployment when the economy is potentially growing. It's a bit of a strange situation we're currently in at the moment, where we have the opposite is happening. We have 2 negative quarters of GDP, and we still have low unemployment and high employment, high employment. So it's a bit of a strange one at the moment, but the market is looking past, I guess, the technical recession data, and still looking to potentially hike rates. It just depends on how much they are looking to hike. So with that being said, that is still appreciative of the dollar, and so for me, any pullbacks into demand zones are potentially, or should be seen as, buying opportunities. Now, not necessarily buying the dollar index, but as that has made new highs, higher highs, higher lows, you can use the dollar index as I guess as confluence with your dollar pairs. If the price of the dollar index comes down to maybe the 108s and comes down to that nice fresh bottom end of that demand zone, and that ties in with maybe some sort of maybe demand zone on the dollar yen or the dollar Swiss, then you can look for any kind of positive price action, looking for dollar buys, as long as obviously the fundamentals are in place. And also as well, one of the things to look towards, and that's going to confirm whether, I guess, whether the Fed are going to be hiking at 50 or 75 basis points. Obviously, if they hike at 75 basis points, then that is a lot more positive than 50 basis points. But either way, it just depends on which one they're going to do. But it's going to be really determined with CPI figures, which is coming out. I think it's is it this week or next week? So look out for the US CPI figures. If they dropped recently, I think it was to 8.5%, and if they continue to fall, then the Fed are likely to do 50 basis points. Yeah, if CPI, the inflation, is seen as rising, yeah, then they are likely to do 75 basis points to try and get inflation to come down to their 2% target. Yeah, so the movement of the dollar is going to be really determined over the next week or so with regards to CPI, and that will determine whether what the market thinks in terms of the likely hike that they're likely to do, whether it's going to be 75 or 50 basis points. But overall, for me, it's still, the dollar is still a buy, and I've been saying that I've been buying the dollar for a very long time, and you can pretty much see what's been happening over that period of time, right? It's a no-brainer to look for just pullbacks on that dollar. Anyways, and again, you can basically fact check that if you go to my videos, right, and look back on all of my videos that I've done over the past year. In fact, I challenge anyone out there who's watching this video to try and find the video that I've done this year where I've said that I'm selling the dollar. If you can find one, I will give you a free month I guess trial with my mentoring, which I am actually opening on Monday the 5th. Right, enrollment starts 5th of September, and it'll only be open for 8 weeks. So if you are looking to join, then I am opening on the 5th of September, and I know a lot of people have been waiting to join. And again, it will probably close maybe about by the end of the week, maybe about the 10th or whatever of September, and you have a chance to join if you can find, for absolute free, if you can go on my YouTube page and find the time, right, where I have said that I am short on the US dollar over the past year. So you've got a lot of videos to go through in a week, and if you can find it, it won't be there, but if you can, then you can get basically in for free, get a free month trial subscription. Just email me at info@trading180.com if you find the video. I'll be very surprised if you find anything. Anyways, going back to the charts, moving on to the dollar yen, right? Dollar yen 140s. Now the dollar yen is a very strange one. I was just saying to the members in the group that I might actually be try and get short on this pair, and if it's not this pair, it'll probably be something like the euro yen and the pound yen. I don't cover those pairs in this weekly video, but just to show you, just to tell you that those two pairs I will be looking to buy potentially buy the yen on. And the reason why is because 140 has been really the line in the sand for the Bank of Japan, and recently the Bank of Japan came out and said that they are still looking to basically remain neutral and are dovish on interest rate hikes. But the Bank of Japan has been known in the past, I remember probably twice in the last maybe 9 years of trading, where the Bank of Japan have actually it surprised the market, right? And they've done quantitative easing and loosened policy, and it's really kind of surprised the market. Now 140 was the line in the sand, and they said that if prices go above 140, or they indicated this anyway, that they may have to step in and start to intervene to support the yen, because the higher it goes, is the obviously the more devalued that currency becomes, and the more devalued the currency becomes, it pushes inflation higher. And they don't need inflation to go too far beyond their 2% target, and if it goes beyond that 2% target, it basically means that they're going to need to hike rates. Hence the reason why you're seeing all these other central banks like the Fed, the European Central Bank, the Bank of England, all hiking rates, because of the fact that their inflation is way above the 2% inflation target, whereas Japan, I think, is somewhere around maybe 2.8%. But if the yen still continues to weaken, pushing inflation higher, then they're going to have to step in, and so that could be a great opportunity, trading opportunity, to get short, in fact, and buy the yen. And I was saying to the guys in the group that it's something that I am definitely looking to do as we obviously go higher and higher. And one of the things to look towards, actually I'm not going to tell you all that, because that's really reserved for the members in the group, right? Because I can't give that. It would be unfair on those group members who are in the group for me to keep that information kind of a bit secret, because they're obviously they're in the group for a reason. I can't give everything out for free. So with that being said, just to let you know that in fact I am looking for short trades or buying the yen. But in the meantime, if prices obviously naturally come down and pull back, right, without the Bank of Japan actually having to step in, which in fact, when you think about the dollar, if the CPI figures come out and they come out lower than expected, and then the Fed don't have to hike as much. In fact, what that could do is have a bit of a, I won't say negative effect, but it could devalue the dollar to a certain point where in fact it will still be a decent buy around these 137s, 136 areas. So that's where I am with this at the moment, but I do have a bit of a short bias potentially as the higher this currency pair goes, but that would all depend on the Bank of Japan and what they do, and some other factors. So that's where my bias is. Let me have a quick zoom out. Yeah, there's nothing really to the left that's worth looking at. Anyways, looking towards the dollar CAD, and the dollar CAD this week are actually or the Bank of Canada are looking to hike rates by 75 basis points. Oh, sorry, I keep saying Bank CAD. Sorry, it's the dollar Swiss. I did that last week. Anyways, dollar Swiss is obviously different. I thought this looked a bit different than the dollar CAD. Again, the path of these resistance is to the upside, because even though both central banks are looking to hike rates, I think the dollar is ahead of the Swiss franc in terms of how much they're hiking and just where they are economically. But I think with if risk off does start to come into the market, I think the Swiss franc could start to strengthen, not necessarily against the dollar per se, but against other currencies like, for example, the euro and the pound. But I think any pullbacks into the 96 area is decent for a long trade. Any trades right now, if you believe that the Swiss franc is a bargain against the dollar, don't know why you would do that, but or think that. But if it could be, then this is actually a decent area to look for any kind of short trades. Dollar CAD coming up to this 131, 132 area. And I think technically I do like this as a sell. I said this last week, not necessarily a pair I'm interested in buying or trading at all, but there is technically there was a reason to try to look for some short trades at the top. But again, I think the path of these resistance is to the upside. So any pullbacks into that zone, the 130s is a decent buy, I think. If you do want to be a buyer of the Canadian dollar against the US dollar, then now is really the time. Any pullbacks into that area there, I think, are decent for a short trade. In fact, you may probably just have missed the best opportunity, which would have been the first touch of a level. Second touches of levels tend to diminish the level working out, because it's no longer a bargain. It was a bargain here, but then multiple touches, it becomes less of a bargain because everybody else can see the bargain, so everyone else is buying there, which basically just means that it's not really a bargain anymore. So not really a pair that I'm interested in trading though, but if you are, those are really your options. New Zealand dollar, US dollar, again, really nice technically, nice demand zone technically, but not something I'm interested in taking. Although I did say last week that I think the path of this resistance is still to the downside with the US dollar. Risk off being something that is in the market, and commodity currencies versus the dollar don't do so well. So again, the path of this resistance was to the downside. Any pullbacks into that zone, I think, should be short in opportunities. If things do turn around from a risk sentiment perspective and risk starts to come back on, then I think this New Zealand dollar is going to be a very nice potential buy, but I can't see that happening anytime soon. Pound dollar again, look back on my past videos. I've been saying basically that my bias is to short the dollar and the pound, and you're seeing this really kind of play out, right? A lot of traders would have been long here, trying to get that double bottom. But if you don't understand the fundamentals and don't understand what's going on and why you shouldn't be buying the pound here, against the dollar, then you're just going to get slaughtered, right? And this is basically what has happened to those traders. They just look at technical patterns and say, all right, then, well, that should work. But understanding there are forces beyond the price chart which determine which way a currency, should move in. And it was obvious, the probabilities anyway was to the downside. And again, check out my my previous weekly videos, and I've been saying, short the pound. And for again various reasons, one being Liz Truss plan to turbocharge UK economy already alarms markets. A concern about a mix of big spending plans and upending Bank of England remit. So she's trying to, I think she's trying to say to the Bank of England that they should look at their monetary policy as far as inflation and stuff like that. Crazy. What these politicians, should be gone in, maybe depending on how long, maybe 3, 4, 5 years, the Bank of England will still be around. So anyways, the pound and the UK bonds are trailing most other major economies, and I'll just read some of the paragraphs on this. And Liz Truss is set to become the UK Prime Minister this week with a plan to turbocharge the economy while slashing taxes, already worrying investors amid double-digit inflation. And it says that she would take office after declaring a willingness to run up the budget deficit, just as the Bank of England is raising interest rates and selling its own holdings of government bonds. She has also indicated that she will review the bank's central bank mandate. And markets have already signalled concern about a Truss premiership, as bond traders fret that a flood of gilts, which is basically the government bonds, government treasury bonds, known as gilts, may be too much to absorb, triggering higher debt servicing costs. So since July the 7th, when Johnson decided to step aside, actually was forced, borrowing costs on the 10-year government bonds has risen faster than those of any of the other 22 major bond markets. The pound has also trailed 132 of the world's top 50 currencies. And quote from Mark Capleton, strategist at Bank of America Corp. He says, "We have a number of concerns about the dependence on the kindness of strangers to fund the UK when the public finances are likely to deteriorate materially." So that's not great. Cost of living crisis is going on as well. And it says, should Truss win, she'd inherit inflation at 10.1% and on track to breach 20% for the first time since 1974, according to Goldman Sachs Group. Investors are betting on interest rates rise of 4.75% by May, threatening misery for mortgage borrowers with more familiar with rates below 1%. So again, not good. With the Bank of England expecting a recession by the end of the year, industry has also been told to prepare for orchestrated blackouts this winter. Labour groups talking about the first nationwide strike since 1926. So all these issues going on in the UK, and you could just see it happening, right? Regardless of whether the Bank of England are hiking rates, they're hiking into weakness. And if you watch last week's weekly call or weekly video, I was saying that I read a HSBC article which basically was saying that when central banks hike into weakness, economic weakness, it's rarely positive for that currency. So if you don't understand this is why you watch my videos, and so you can prepare and stay on the right side of the market more often than the wrong side of the market, right? And so for me, really, any pullbacks to this supply zone are buying opportunities for the dollar, or shorting opportunities, at least for the foreseeable future anyway. Can't see myself buying the pound for now unless there is a reversal of fortunes, which it does not look like at all. Also as well, I think there were some other articles here. Goldman Sachs, was just talking about inflation could top 22% next year in the UK. And then there was UK slips behind India to become the world's 6th biggest economy. So loss of status comes as ruling Tory party elects new premier, and cost of living shock batters the UK while Indian economy surges. So we're losing our status in the UK as an economic, from an economic growth perspective, which again, is reflecting on the price chart, right? This is not stupid Elliott wave, regardless of, I don't care what you believe in Elliott wave, it's not going to tell you, Elliott wave is not telling you where prices are going in the future. Yes, you can plot wave 1, wave 2, A, B, C, D, etc. But if you don't understand fundamental analysis, you're constantly going to be guessing what wave you're in. And understanding fundamental analysis, you don't need to know what wave you're in. You can just tell the direction over the medium to long term, right? This is a no-brainer. This is an absolute no-brainer. Anyways, looking towards the euro dollar, right? Euro dollar. And euro dollar, again, for me, my bias is still to the short side. Any pullbacks to any kind of supply zones for now, I think are definitely selling and shorting opportunities for the euro. You could get some positive data come out. The euro is looking to hike rates by 75 basis points, between 50 and 75, same as the US. But they have some issues. So looking at this article, the ECB still seen playing catch up as rate hike path steepens. A survey of economists predicts 75 basis points hike next week. Inflation outlook also shifts higher in August to the 1st September poll. So again, central banks trying to tackle inflation issues, they have to hike rates. But I think it's still against the dollar. It's going to be a tough one in terms of the euro really appreciating. And again, I think Goldman Sachs was talking about European gas prices will stay high. Yes, they came down this week, I think something like about 50%, but there is the fear that and I think it was, in fact, was it here? It was in the week ahead. It was talking about the German, so it talks about, for example, the situation will be closely watched because the pipeline to bring gas to Germany from Russia will no longer reopen as planned. So you can see that that's probably going to end up, pushing up gas prices. So I think the pullback in gas prices, this week, or when was it, Thursday, Friday, was probably more temporary than anything. And gas prices going higher, basically cost of living, which also can push, obviously the economy into a recession, as well as even rate hikes. Rate hikes, can and typically do push the economy or contract the economy, right? So lots of problems going on for Europe. I think even more so Europe and the UK, when you consider who's the dog with the least fleas. The dog with the least fleas for me is the US dollar, and the dog with the most fleas would be the Europe and the UK. So with that being said, for me, it's really about just understanding maybe just pullbacks. If you can get some into some supply zones, or if prices do break beyond that demand zone, then pull back into what would be a supply zone before looking at getting short. But there could be a short term. I'm hoping for a bit more of a pullback, to be fair, around that 103 area, the 102s, for any kind of shorting opportunities to get back in on this euro dollar. Aussie dollar, again, looking at this commodity currency against the dollar, with the US dollar was really bound to kind of strengthen. I do think, like the New Zealand dollar, US dollar, I think that's a nice technical level to look for buy trades, but for me, not really a pair that I'm looking at buying at all, but if I was, again, the path of least resistance would be to the downside. I think I said this last week, and you can see this kind of breakthrough. Again, the reason why I would be buying the Australian dollar would only really be if risk off sentiment starts to dissipate and risk on starts to come into play. So that could start to happen. Or again, if the US dollar don't maybe hike as much as they expected to, or there's some really bad economic data, or inflation starts to actually come down, then the US will stop hiking as much, which would then cause, I think, the Australian dollar to actually be a very nice buy around here. So those are a few things to watch for. If I'm going to if I'm going to short the Australian dollar, or I say short the US dollar, I think one of the currencies I would be shorting it against would be the Australian dollar. Would be definitely a decent choice to go to look to buy against the US dollar. So yep, there's that. If not, you're looking at sell trades within this supply zone here. Aussie yen, again, looking for some decent pullbacks. Let me just clear the chart a bit. Yeah, looking for some decent pullbacks. We've just had really just prices keep going higher and higher, will grind higher, and biggie, I do want to get long on this, but also as well, I'm very cautious about the Bank of Japan looking to potentially step in and support their currencies. So again, you start to see where we are in terms of where price, highs and recent highs and recent lows. The timing of the Bank of Japan stepping in, we could be at decent highs to look for any kind of short trades. But again, that would have to also depend upon whether the dollar yen is at the 140s and beyond, right, before looking at potentially getting short around here, or establishing short positions around this 96 area if you were looking to buy the Japanese yen. For me, though, path of least resistance, hopefully if prices can kind of pull back, especially down to these 91 areas, I think that's going to be a nice potential buy for the Australian dollar. And finally, gold. Gold, I've been saying for a few weeks, I think gold is definitely a buy, not necessarily from a trading perspective, because really the dollar is still appreciating. But going into next year, I do think that we should see gold start to pick up. And I just want to show you something. 1 second. So this is from the Discord room, and I was just doing some analysis on gold, and Rubyron was saying that gold is edging closer to the monthly lows, and we spoke about this probably maybe a couple of weeks ago, where we were saying there's there are some setups around that low where I want to be involved in. Now here I said, not financial advice, and this was to the group, but I said, but I believe that gold is a buy. I covered it in the group call yesterday, but as we go into a global slowdown and the central banks are likely to start cutting rates next year due to impending recessions, I think it's the perfect opportunity to start to scale in at these prices. The Fed and other central banks are coming to the end of their hiking cycle, which has currently been seen as a gold negative, right? So their hiking cycle, interest rates being hiked, is seen as a gold negative. But if they're coming to the end of it, right, then that should be positive. So anyways, I'll continue reading on. Right, it's been seen as a gold negative because investors are prioritizing dollar yield over risk off safe haven concerns. So the logic should follow that if the Fed and other central banks will have to reverse their monetary policy next year, along with recession risk off fears, then that should be positive for gold, right? Trading gold will be more difficult in the short term, as trying to pick bottoms always are, but from a buy physical gold perspective, I think these prices are near their lows. Technically, I'd want to see a stop hunt below the major level to start to trade it. Of course, I could be wrong, but it's a trade investment idea I'm willing to share with you. If it makes sense, then prepare, but please don't blindly follow what I say. If it does make sense, if it does not make sense, sorry. If you have any questions, feel free to ask. And I'll put basically a chart with my analysis on there, which again is for the members. And so, going back to this price chart, central banks have been buying gold. They've been increasing their buying, and they look 6, 12, 18 months ahead, right? They're not looking at short-term price movements in terms of looking at 5-minute, 10-minute time frames. They're looking at the bigger picture. And so for me, I do think that gold is a buy, and I'm gonna look to start buying some gold right now as prices start to come down to these levels. And again, not financial advice, but trading wise, I think this is a level I'm not really keen on trading, because it's been touched several times. 1, 2, 3, 4, so might be a level maybe just below it that you can get involved in, probably here from a supply and demand perspective. Maybe something here, right? That would be nice if prices can probably come down to that zone there. But yeah, my bias is to the upside, and again, I don't know what's going to happen this week. Nobody knows what's going to happen week to week, day to day, but I know the probabilities are on my side, that I think and my trade idea is as I think is quite sound in terms of what's coming down the road, and why gold should start to go the price of gold should start to go higher over, at least towards the end of the year into next year. Now again, the timing is obviously the difficult part. Who knows, right? Nobody knows when price will reverse, but there are certain things, again, I can't share around this area that I'm looking for in order for me to trade it, at least. But I have to see that, and then I'll look for a decent trade. Anyways, if you are looking to buy gold, just know that this area here isn't necessarily the best zone to look for long trades, because it has been touched several times. From a selling perspective, if you still believe that the US dollar is the buy, you should look for at least a sell trade into that supply zone. That's 1749 to 1765 area, to look for any kind of short trades to continue buying the US dollar against gold. But I think that trade might be coming to a bit of an end in terms of the longer term fundamentals. Anyways, thought I'd share that with you guys. Again, don't forget that I do have the enrollment, which opens the 5th of September. Go to trading180.com. Watch this video as well. It will tell you basically all about the mentoring and the Discord group. If you have any questions, just email me at info@trading180.com, and I'll try and get back to you as soon as I can. And guys, take care. Have a great trading week, and I will speak to you soon. Until the next video.